Inside Options is brought to you by the Johannesburg Stock Exchange. Manage your risks with SAFEX style options.
Hello and welcome to Inside Options. I'm James Boardman. Tonight we're continuing our series where we speak to options traders about their strategies. In this episode, I'm joined by Subhashini Mudli from Corporate and Investment Banking at Standard Bank. Tonight we're going to be talking about the interesting world of Forex, foreign exchange, and particularly looking at some options in terms of currency options, how you can hedge, whether you should hedge, and just a little bit about the history of the Rand's movements over the past few years. It's just some of the things we're going to be talking about tonight. So, Subhashini, firstly, thanks so much for joining us on the show tonight.
It's a pleasure.
And also, how big is the FX market around the world?
The FX market is actually very big. Sorry.
It's probably the biggest market.
It is. I was actually going to say that 70% of the rands actually traded offshore, rather than onshore, which is a very interesting fact, and one that we're not aware of. The rand is actually a very liquid currency, seen as one of the emerging market currencies, and one that you can actually get huge returns on just from a carry trade point of view as well. So you find a lot of investors investing in the rand and other emerging market currencies, and because it's so liquid, they can get out of it.
They can get
exactly.
in and out. So in the stats, I was talking to one of our guys at the JSE's currency division. They're saying that around the world, each day, $3 trillion trade.
That's correct.
That's huge.
That's huge.
And that dwarfs the equity markets, fixed income, everything.
Exactly.
It's the biggest market out there.
Yes.
And then the other interesting thing was, as you said, the rand we punch above our weight as a currency. As a country, our currency is much more liquid than it possibly should be. I mean, in GDP terms, we're probably, I don't know, in the 30s or 40s maybe.
Yes.
And then we're like in top 10. We were in the top 6. Now we're in the top 10 in terms of the liquidity and the volume traded on the currency.
Exactly. And it's just because it's such a liquid currency, you can get extra returns from it just because of your carry trade. Most investors
Let me stop you there. What's the carry trade?
Effectively, it's the fact that you can borrow in low interest environments such as the dollar and the yen. And you can invest into countries that yield higher interest rates, such as South Africa, Brazil, Turkey. And so these emerging market currencies actually offer greater value because you can basically borrow some yen and then deposit it into South Africa in a bond or which other vehicle you would prefer, yield higher interest rates, and then convert it back into yen and take it out of the country.
So as I understand, like my basic sort of textbook stuff, that shouldn't really work that well because the currency should be depreciating faster than than your interest is accruing, unless is it real rates they're looking for. It's sort of inflation versus, because the currency around the world moves by inflation. So in South Africa, we've got higher inflation than they do in, say, the States or Japan. So our forward points are higher because they're saying the rand's going to depreciate against the dollar over time because we have more inflation than they do.
Yes.
So it's weird that we can still get returns above inflation. I mean, how do you measure that?
Yeah, I mean, that's where the exchange rate comes into play. So if you think about it, in 2010 and 2009, rand's trading around 10.9 to the dollar. You borrow in dollars terms, so $1 yields you 9 rand. You place this on depot. You earn an interest on the 9 rand. You convert it back at 6 rand 80.
Wow.
Yes. So you're not just getting the interest, you're also getting the exchange rate positive movement.
So it's it's a turbocharge.
Exactly.
Because your whole return you've got, you just then multiply it by the change in the Forex. So it's multiplicative, it's not additive. I mean, you can add it just to get a rough idea that the currencies move 15%.
Yes.
You actually should times your whole return by 1.15 to get the right answer.
Exactly, yeah. So you're looking at interest rate yields as well as exchange rate yields and the positive exchange rate movements. And that has been huge in terms of investment returns.
And then what do you actually do for Standard Bank on a sort of daily basis?
I actually head up the currency options desk at Standard Bank. We are a sales and structuring team, and basically what we do is we look out for solutions for our clients in terms of the best way forward for hedging their foreign exchange exposure. And this would look at your different possibilities. So you would have spot, which is just basically trading in the spot market. You would have forwards or futures, which is locking in spot plus the interest rate differential. And then you would have the hedging solutions where I concentrate on. And the majority of these solutions look at providing a protection rate against unfavorable movements in the rand, whilst allowing for some sort of participation in favorable movements in the rand. And these are unique solutions. So we do look at a particular client's needs and structure around
what
that.
kind of clients do you have? I mean, are they big importers, exporters, both?
They generally both. We generally find that it's both. Exporters tend to be slightly bigger just because hedging actually is in their favor, considering the interest rate differential.
Okay, so that's that carry thing we said.
Yes.
Okay, so just to the viewers out there, the carry trade, the carry on a particular trade, if you have the rand trading at 7 rand at the moment, a forward will be trading at 7 rand 10 to the dollar. We're saying the rand is going to depreciate by 10 cents over that period. So if you are an exporter, you're going to be hedging by selling that 7 rand 10, you're earning that 10 cents. So you're going to be more predisposed to trade because it's actually going to be a little bit of a revenue generator if nothing happens in the market. Whereas if you're trying to trade the other way, you're paying away 10 cents in that carry. So that's a negative carry trade. Kind of like sort of selling an option versus buying an option. Selling an option, you get money in, but you're taking on a risk for doing that. Buying an option, you pay a premium out, and you're getting an opportunity by paying that premium out. So that's why they hedge more, because it's
to their
skewed
benefit.
their way. Okay.
Yes.
And then let's look at a slide here. We've got a picture of the US dollar ZAR over the past 20 years, and it's pretty interesting to see this sort of massive price movement. I mean, we can see there, that's sort of 2001.
Yes.
Now, that's a massive move. I mean, that there on my graph, that's going up to 12 rand to the dollar.
Yes, exactly.
That tip there.
Yes.
And I mean, when it started that move, it's at a much lower level there, and it's just rocketed off.
Yeah, when the rand weakens, it's amazing. You blink your eye and the rand's gone.
Yeah, I mean, you can see that's quite scary.
Yes.
That's really the one you have to look out for.
Exactly.
Is as a business that has import and export duties.
Exactly.
That it can shoot up.
Yes, and you can see by those peaks, those were all driven by certain events.
Yeah.
I mean, that was September 9/11 mainly.
Yeah.
And the rand shoots out to about 12. And at 12, everyone's thinking this thing's going to keep going, to 16,
and then it comes
17,
back.
And it comes back. And that's due to the fundamentals of the rand showing that it's actually a resilient currency.
Yeah.
And you see it coming back again. So it's actually very interesting.
We've got the same sort of
same story,
spike
2008, due to the global credit crisis. Fleeing away from all risky assets, literally putting all of your money into the dollar and into gold.
Yes.
And you see the rand depreciating very fast, and got up to.
The interesting thing is in both of these, it's not really South Africa's fault.
Exactly.
It's more sort of global conditions. I mean, we're being buffeted by the winds and fortune of the world economy rather than our own.
That's exactly it, and that's what's so difficult in terms of trying to determine where would the rand be in a couple of days, let alone a couple of months, because it's largely driven by what's actually happening internationally, rather than what's happening locally.
You need to think about protecting your business. I mean, we can see that straight line up. That's pretty nerve-wracking.
Yes.
That's where you want to be covered.
Exactly.
You want to know that you can get some protection. Equally, when it comes right back down, suddenly it's quite a different business proposition.
Exactly. I mean, my advice to all my clients generally is get a budget rate.
Yeah.
Protect that budget rate. That's your first. Your first focus area.
It's just safety first.
Safety first.
So stay tuned. We're going to be right back after the break.